everyone. Welcome to the Stock Market Morning Prep video for Friday, September 19th. Green across the board. Dow Jones up 109, Nasdaq up 31, S&P up 9, almost 10 points, and a Russell up $5.38. So we did get Janet Yellen and the Fed out of the way. We have our Scottish vote that came in overnight. Decided that the Scots were going to stay in the UK, and that has fueled more speculation of buying. ES is now up about $7.25. So when is this train going to end? Well, no one knows, and we need to follow what price action's telling us. And also, what disturbs me is there's a lot of indecision in certain asset classes. Nothing is really humming on all cylinders, if you will. So what we need to do is continue to just really play the best setups that you possibly can, and that means that you're not going to be busy trading as much as you should when everything is humming on all cylinders. The markets are grossly overbought. We all know that. But in the short term, we have paused for 10 days, and now we're back above that channel. So that kind of unwounded a lot of the overbought reading in our momentum oscillators, which I'll show you in a moment. But we have to be cautious here, guys. There's just no two ways about it. At least I am. There's a lot of red flags, and there has been red flags throughout 2014 and 2013, and markets have ignored divergence. So if you did that, you weren't making any money. That being said, just trade the best setups you possibly can. Follow where the money is flowing. And again, this is a stock picker's market, and a very dangerous market if you don't know what you're doing. So if you're new to the game, trade very cautiously, and be selective. That's all I can really say. Let's get right into the indicators. I'm going to show you some, and you're going to see why. Mark, why are you so nervous and this and that? And well, you know what? I'm not a bull, I'm not a bear. I follow what the trend is. The trend is up, and it's been up, and we haven't had a correction in well over, I believe, 3 years. A 10% correction. It's not healthy for the markets, because when it does correct, it's going to end miserably. But nobody knows when that's going to happen, so we have to just be aware of the risks that are out there. Bullish percent SPX, very reliable indicator. Markets making new highs, and the bullish percent is not. Hasn't even crossed back up to the upside. If we were up at the 80 percentile, maybe that would say, okay, internals are getting better. But the internals are not getting better. The NYUD, which is the Advanced Decline with Volume, very, very important indicator. What is going on here? The breadth of the market is miserable. It's not good. We're making new highs, and we're doing nothing internally. Eventually, it's going to have to play catch-up one way or the other, good or bad. Stocks above the 50-day moving average, making a lower high from this high, lower high from the previous high. Not good. Stocks aren't moving. The majority of stocks aren't moving. Okay? McClellan Oscillator, very reliable indicator of overbought, oversold. This is now below the 19. So this does tell me that there's plenty of room to the upside, at least in this indicator, to say that we have more room to go higher. Okay, I know it sounds crazy, but it's true, and that's why I said trade price action. Price is king. Price is what pays us. So let's make sure we do that. Yes, volume would be great. Volume would solidify the move, but we're not getting it. So just be careful and selective in your trades. Okay, so that's what really is concerning me. The IWM has not gone anywhere, actually making a bear flag while the other four are moving higher. So that being said, the majority would win, right? Obviously, but the IWM is one of our leaders, so we have to pay attention to that. If that really starts to sell off, I do think that the other indices and market participants will pay attention to that. All right, so let's go right into the charts here. We have our dollar index. This is another thing. Pay attention to what's going on with the dollar. Look at how far we have run, literally straight up vertical since July. Now, remember I mentioned, I showed you this weekly chart here. We have a weekly chart that we are now into some decent resistance here. I mean, this is decent resistance, guys. And we've been up for 11 straight weeks. Do we go higher? It is definitely possible. I'm not going to deny that. Would I tell you to short the dollar? Absolutely not. What I am telling you to do is pay attention to this, like I said as far as several days ago when we had a big move in crude. Crude oil now moved to the downside, is now moving low and making lows again. But watch this, because when profit taking does happen, you're going to get a decent pullback. I mean, look at how far the 8, which is a momentum indicator. This, to me, I wouldn't touch this long at all. If anything, I'd be looking to fade this once we get a trade signal to the downside. Okay, we need a reversal candle and taking out the low here. So, but this would definitely put in a bid to gold, oil, commodities, whatever commodities you like to trade. This would definitely put a bid into that. So, remember, keep an eye on what the dollar is doing. Now, let's run into the in our indices. Now, we had this 10-day move of just chop. Right, we broke down for 1 or 2 days. We stayed down here, and then we ran back up, and now we're back above this channel here. We've made another intraday high in the overnight of 2014. To me, if we continue to stay above this channel now, base for a couple of days, I think the next step is going to be 2032, which is the 1618. Okay, I know it's crazy, but that's exactly what it's looking like right now. As you can see, when we have markets that move in a straight line and then consolidates and a shallow pullback, that's bullish. And I would love nothing more to the markets to at least correct. It would be healthy. It'd be healthy for a Santa Claus rally going into the end of the year. As you know, we are almost done with September already. So this is something that I would love to see, at least for a reset. Okay, here's the daily chart. I want to show you. We just took out this consolidation area here, and as you can see, we're up now 5 days. And it's funny, right? You see you're down 3-4 days, you're up 15 days, sideways for 5, and you go straight up vertical again. So eventually it's going to end in a very, very bad way. But until then, we just have to obviously pay attention to what price is telling us, okay? Here's the IWM, another red flag here. Again, we have market divergence for quite some time, pretty much 2013 and 14, and what's happening, they're just totally ignoring it. So pay attention to it, and definitely be aware of what's going on around you in case something does happen, because it does move quite fast, risk on, risk off. Moves quite quickly, and you need to know that just in case. Now we're into this moving average resistance here, so let's see if this does have legs and does play catch up with the other indices. But it is one of our leaders. If this starts breaking down from this bear flag, your first test will be the 200, and then obviously these lows again. And that I really don't think that'd be healthy for the markets. Dow Jones took out the double top, and now we're looking for the upper end of the trend line here, which would probably coincide nicely. So that 173.50 would really be the next upside target. You got a little confluence area resistance here, the 1272, and of course this upper trend line area here. And lastly is the Qs. Oh, excuse me, we had transports. Apologize. All right, so the transports, again, our leader, and this is our true leader, and now is moving up. Took out the 1272 from this high to low, and now is moving up to the upper end of this channel. That'll probably be your next area, and then another move to the 1618. Lastly is the Qs, as you can see here. This did very well on this little sell-off we had from August. Did very well, very shallow pullback. We ran all the way up, and now, as you can see, the candles are getting larger, so that means volatility is starting to step back into the market. That means that we're ready to vacate the area, whether it be up or down. Right now, it looks like we're actually headed up to the upside. So let's keep an eye on this. We'll have 1618. I'll do some fib work, and we'll go up to the next extensions here, okay? Have a great day. Enjoy the long weekend, and we will speak to you on Monday.